Ladies and gentlemen, good day and welcome to the Anupam Rasayan India Limited Q3 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kanav Khanna from Christensen IR. Thank you, and over to you, sir.
Thank you, Inba. Good evening to all the participants on this call. Before we proceed to the call, let me remind you that the discussions may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result performance or achievement to differ significantly from what is expressed or implied from such forward-looking statements. Please note that we have mailed the result and the presentation, and the same will also be available on company's website. In case you have not received it, you can write to us. We'll be happy to send it over. Now, to take us through the result and answer all your questions today, we have the top management of Anupam Rasayan India Limited, represented by Dr. Kiran Patel, Chairman and Executive Director, Mr. Anand Desai, Managing Director, Mr. Afzal Mulkani, Chief Financial Officer, and Mr. Vishal Thakkar, Deputy Chief Financial Officer. We will start the call with a brief overview of the quarter gone past, and then we'll conduct the Q&A session. With that said, I would like to hand over the call to Dr. Kiran Patel. Over to you, sir.
Thank you. And I welcome every one of you to the Q3 FY22 earnings call. As I am speaking to you, the third wave is now getting towards its end, and I hope each and every one of you have been safe from this COVID era. I'm happy to share with you that our company, building on our core DNA of value engineering, has taken another step towards integrating our supply chain by acquiring Tenpac Industries Limited. This acquisition gives us impetus to enhance our fluorination profile and bring about efficiencies via backward integration. We truly believe that innovation, financial prudence, and environmental sustainability are the essential components for any company to achieve long-term growth and profitability. Innovation in synthesis and manufacturing has been our core strength, especially in the life sciences and other specialty chemicals, and in the multi-step synthesis and sophisticated technologies for a broad base of Indian and global clients, giving us a way of working towards a solid balance sheet which has judicious mix of debt and equity to fund our future growth and expansion. We also will continue to invest in projects like solar power plants and ensure sustainability of environment, as well as reducing our costs. I also want to reiterate that our goal will be to continue to grow faster than the expected industry growth rate, both by expanding on our selective internal portfolio and continue to focus on strategic acquisitions to fuel our growth. We will continue to ensure that our supply chains are not impacted negatively by aggressive focus on research and development, developing products that will make us less dependent on outside forces to provide our resources. Since we are talking about R&D, I also want to let you know that we have a very strong team that has now grown to 66 R&D professionals consisting of PhDs and engineers having strong technical capabilities in complex chemistries. This innovation-driven mindset will add value to our customers and will ensure long-term business relationship with all our clients, and we continue to be their preferred partners. I want to conclude by saying that we are on our way to becoming a product and innovation leader, and I believe that we are on our way to have continued sustained growth that will benefit all our stakeholders, our customers, shareholders, employees, and society as a large, who are all going to enjoy the benefits of our efforts. That concludes my remarks. Now I would like to hand over to Mr. Anupam Desai, our Managing Director.
Thank you, Dr. Patel. Hello and good evening, everyone. I am delighted to meet everyone again after what I believe was yet another good quarter for our company, and we are here to discuss the developments and results of the quarter gone by. We continue to deliver value to our stakeholders of increased top line and bottom line, driven by volume ramp-up, which was a result of enhanced trust of our existing customers and continued financial and operational prudence. We saw a total revenue growth of over 43% in Q3 FY22 vis-a-vis same quarter last year. We ensured stability of margins by negotiating with the customers for revising our prices towards the second half of the quarter. Decreased cost of borrowing and commissioning of solar power that was installed in Q2 of this year has ensured a PAT growth of 70% in Q3 FY22 versus Q3 FY21. This has in turn culminated into a PAT margin expansion of around 300 basis points this quarter as against the same quarter last year. As you all must be knowing till now, the Board of Directors have approved the acquisition of substantial amount of equity shareholding and joint control of Tech Industries Limited from its promoters. This will give us the benefit of backward integration, thus ensuring that we have uninterrupted access of our own hydrogen fluoride, potassium fluoride, and other such agents that are required in fluorination processes. This will also give us a headroom for further cost efficiencies. We also plan to make further capex investments in Tenpac to increase capacity as well as build infrastructure to manufacture advanced intermediates, as we have huge amount of land that is around 50% which is still vacant and available. The installation of a solar power plant has ensured that the savings start kicking in, and I also want to reiterate the fact that it will culminate into a saving of rupees 10 crores per annum going forward. As in the early calls, we have successfully renegotiated our prices with our key customers, and the new prices will be levied January onwards. Also, as intimated towards the stock exchange, we had an LOI in Q2 that we have received from a Japanese multinational company worth 135 crores. It has now been converted into a long-term contract, and in addition to that, we have signed another LOI worth 700 crores with another existing customer for supplying a life science related specialty chemical product for the next 5 years. These orders will further strengthen our revenue and profit visibility, and they showcase the quality of the product, allowing the customers to depend upon the company on a long-term basis, making us a preferred partner. Our continued value re-engineering efforts to provide our clients with high-quality products have also contributed to our revenue expansion this quarter. We focused execution of our strategy, fueled by our strong capability and track record of commercially manufacturing products, deploying continuous process technology, improving macroeconomic factors and industry sentiments. positions us as a preferred partner of choice for our key clients, seeking a long-term reliable partner. This enables us to increase our wallet share with existing clients and grow our market share while maintaining a competitive pricing. The LOI and the contract that we secured this quarter is a good example of the same. We are continuously working on various molecules in both life sciences and other specialty chemicals in our R&D. Now I will hand it over to Mr. Abdul Malkani, our Chief Financial Officer, for a financial overview.
Yeah. Thank you, Anand bhai. Hello everyone, and thank you for joining us here today. I would like to briefly touch upon the key performance highlights for the quarter ended December 21, and then we will open the floor for a Q&A session. Before I proceed, I would urge you all to go through the detailed presentation submitted to the exchanges and uploaded on our website. For the quarter Q3 FY22, we reported a consolidated total income of INR 271 crores, registering a YOY growth of 43%. The consolidated EBITDA, including other income during the quarter, grew by 36%. It went from INR 59 crores in Q3 21 to 80 crores in Q3 2022. The EBITDA margin decreased from 31% in Q3 21 to 30% in Q3 22. Our profit after tax stood at rupees 38 crores for Q3 22 compared to 21.60 crores in Q3 21. The PAT margin is 14% in Q3 22 compared to 11.5% in Q3 21. Our interest cost has reduced from 14.41 crores in Q3 21 to 5.23 crores in Q3 21. If we talk about the performance for 9 months for FY22, our revenue from operations stood at rupees 749 crores for 9 months FY22 compared to 539 crores for 9 months FY21, registering a growth of 39%. Our EBITDA, including other income, is 215 crores for 9 months FY22 compared to 155 crores in 9 months FY21. In terms of margin, it was 28.20% for 9 months FY22 compared to 27.5% for 9 months FY21. Compared to 9 months FY21, our interest cost reduced by 32.55 crores for 9 months FY22. Our profit after tax stood at rupees 106 crores for 9 months FY22 compared to 48.20 crores for 9 months FY21, registering a growth of 120% in PAT. The PAT in percentage terms increased from 8.5% for 9 months FY21 to 14% in 9 months FY22. Moving on to the segment-wise performance for the quarter Q3 FY22, our life science segment contributed 238 crores compared to 175 crores in Q3 FY21, while other specialty chemicals contributed 28 crores compared to 9 crores during the same period last year. In percentage terms, life science segment contributed 90% of the total revenue and 10% from other specialty chemicals. We can say that this growth is achieved from all the segments, whether it is crop protection, personal care, pharma, pigments, and polymer additives. If we talk about the revenue breakup in terms of geography, in Q3 FY22, the contribution from the domestic market was 39%, Europe 33%, Japan 12%, 9%, China 5%, and remaining 2% from the rest of the world. We commercialized 4 new molecules in 9 months FY22, and we are planning to commercialize another 4 new molecules in the current quarter. Our top 10 customers contributed about 85% of the total revenue. However, there are total 24 products in this. Now, may I request the moderator to open the forum for Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Congratulations for a good set of numbers and thanks for the opportunity.
My first question on the gross front. We have seen a steady improvement over here. From a 9 months perspective also, things are pretty impressive there, given the overall RM-led inflation that we are seeing globally. So any thoughts there, whether, this 64%-65% of gross margins on a 9-month basis are sustainable, or should we see some moderation there? And commensurate to that will be a question on the working capital side, on the inventory days. We had seen slightly elevated days, in H1 as well as last year. Where are we there on that side?
Yeah, sure. Yeah, so your first question is about the gross margin. Yes, currently in the current quarter, the gross margin is 64.65%. But as a going forward, as a sustainable gross margin, we can take a range of 60 to 60% for a near term. This quarter, this gross margin is higher because this is mainly due to the change in product mix. Your second question is about the working capital cycle. As we discussed in the last call that we have already proposed to our customers the semi-annual pricing mechanism. And we were able to convince our 50% of the total key customers for the semi-annual pricing mechanism. So from the current quarter onwards, the significant effect will come from the next quarter onwards, and we will improve our inventory significantly. And by the end of this, in the next pricing negotiation, we are targeting to convince and to convert the semi-annual pricing mechanism to the balanced customers. And last year in FY21, the inventory was about 220 days, and our target was to reduce to 185 to 190 days by 31st March 22. And we are on the target, and we can see some improvement in the current quarters, but the significant improvement we can see from the next quarter onwards.
Sure, sir. That's helpful. Second thing, on the revenue growth trajectory, for the earlier guidance of, around 1,500 odd crores of revenue by FY23, and this was largely on the gross block of FY21. Any thoughts there, given this Samsung acquisition as well, including the acquisition and excluding the acquisition, how are you looking at, revenue growth from a 2-3 year perspective?
Yeah, we stick to our original guidance of 34% CAGR, which we had in last 3 years, and we expect the same growth trajectory to continue for the current year as well as next year, irrespective of whatever capex we have been doing. And in addition to that, yes, this Tensec acquisition, this revenue will be in addition to our estimated revenue, if we can add.
Sure, sir. Thanks for that, and probably I'll get back into the queue. Thank you.
Thank you. Our next question is from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Good evening, and thank you very much, and congratulations on your performance. So, the first topic, is there any seasonality?
Sorry to interrupt. Mr. Ramesh, we are not able to hear you very clearly. It's sounding muffled. If you're in a hands-free or something or speaker mode.
Hello, can you hear me now?
Yes, sir.
Hello? Can you hear me now?
Yes, we can hear you. Now we can hear you.
Yeah. So I was just trying to understand if there is any seasonality in terms of the revenue you book from each order, because last year third quarter was a beaten down quarter, 184 crores. So as we move along the next few quarters, should we expect quarter-on-quarter growth, or will there be any seasonality between first half and second half or any particular quarter? And second thing is, if you have to look at the future growth, how do we, link that to your capacity and the order book? What will drive the growth in terms of the delta in terms of revenue for each year?
Sure. First, your first question about the revenue estimate for the current year. Here I would like to say that due to the seasonality of the couple of segments, in every year, in first quarter, our revenue is approximately 20% of the total estimated revenue. And in second and third quarter, this is 25% of the total estimated revenue. And in fourth quarter, we are achieving 30% of the total estimated revenue. If you can see the trend of last 5 years, then it is the same as 20%, 25%, 25%, and 30% in the last quarter. And considering this trend, and if you calculate this trend, then in 9 months FY22, we have achieved the sufficient growth. And in the last quarter, we can achieve the 30% of the total estimated revenue. In view of this, we are in line with our estimate of 34% growth in the current financial year.
Yeah. So no, I just wanted to understand what was the reason for that dip in revenue in 3Q FY21, if I may ask, just to understand that.
Yeah, in Q3 there is an increase of 44%, right?
Yeah. No. So, but why? What happened in the base year last year?
Yeah, there is nothing specific for that. In any way, we are targeting that against this 25% growth in the current quarters in Q3, we have achieved the growth of 44%. This is due to the due to the addition of the new products from Q3 also. This was already commercialized, but the offtake from the customer was on higher side.
Okay. The second thought is now when you look at the estimates for future years, do we link that to the increase in capacity utilization, or do we link that to the asset turn on the capitalized assets, which is more representative of the growth in revenue?
Yeah, if you see the capacity utilization, particularly overall capacity utilization is 85%. But if you see the capacity utilization for our recently commercialized unit number 5 and unit number 6, for which capacity utilization in quarter 3 was 75%. And the current year we are targeting our capacity utilization of 75%. And in the next year, we are estimating our capacity utilization about 90% for our newly commercialized unit number 5 and unit number 6. So in the next year, we can achieve a growth of our 30 to more than 30% growth from our existing capacity utilization only. And to take care of the growth from FY24 onwards, we need to do some capex, which we are planning, and we will do that. And we can achieve the same type of growth from FY24 onwards also, but it is from the new addition of new capacity or a value engineering, which we have been planning.
Okay, this is one last thought. So from the TANFAC acquisition, based on your assessment and the business plan, can you give us some indication of what could be the potential addition to your top line and the EBITDA margins from that business? Because we don't have much visibility on the volume numbers in the TANFAC annual report. So if you can give us some sense in terms of how you see the top line growth in TANFAC and the EBITDA margins, say for 23 and 24, that will be helpful.
Yeah, sure. So this acquisition is basically the strategic decision to expand the product series under the fluorination chemistry of Anupam. And if you see in the current year, in the 9 months FY22, the TANFAC has posted a revenue of 253 crores with EBITDA of 65 crores and profit after tax of 46 crores. And on the basis of that, we can say that as an annual EBITDA, we can consider in the range of 35 to 40 crores in the near term, and the profit after tax of about 30 crores, and revenue of about more than 150 crores, considering that we are going to acquire a stake of 50%, because the 20% we already acquired from the Birla Group, and we can assume that maximum we can get 26% from the public shareholders by way of an open offer. On the basis of that, we can consider 50% revenue of the TANFAC in the consolidation of the Anupam Rasayan balance sheet. But yeah, going forward, we are also planning to put the higher capacity utilization for the key products, HF and KF, because we are also captive consuming the potassium fluoride, which is the KF. Apart from this, as discussed in our earlier calls, particularly to discuss this acquisition, that we are also planning to increase the capacity of the KF potassium fluoride. And after that, at the later stage, we will add niche fluoro derivatives, which will have applications in crop protections, pharma intermediates, and polymers, such as fluoroelastomers and fluoroelectrolytes and other polymers which have application in polyamide and semiconductors. But this need a capex, and as we guided in our earlier calls, that we are planning for the capex of 200 crores. But currently, as of now, we are not considering any new capex. Only on the basis of the existing revenue of more than 300 crore rupees plus 100 to 125 crore rupees, we can add the revenue by do some debottlenecking, and by nominal capital expenditure, and increase the capacity of HF and KF.
Okay, thank you very much, and wish you all the best. I'll join back with you.
Thank you. Before we take our next question, we would like to remind participants to ask a question. You may enter star and 1. Our next question is from the line of Ridhima Goyal from Acquaint P Ventures. Please go ahead. Ms. Ridhima Goyal, could you please unmute your line and go ahead with your question? There seems to be no response from this line. We'll take a next question. That's a follow-up from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Yeah. So the other aspect which I would like to get an understanding about is, to look at your business segments out of life sciences, what would be the share of agrochemicals and pharma? And in terms of your incremental growth on your current order book and LOI, what would be the percentage share from agrochemicals and pharma? And what are your thoughts in terms of increasing the proportion of pharma, where there seems to be a very exciting opportunity in the transfer? So if you can share your thoughts, that would be useful.
Yes, if we talk about the segment-wise revenue, then the 73% revenue comes from the agrochemicals, 14% from the personal care, and 3% from the pharma, and 10% from the other specialty chemicals, mainly in the dyes and polymers and pigments. And going forward, we can say that this growth will continue. Approximately, agrochemical will be in the range of 70%. Personal care will be 12 to 13%, and the pharma will increase from 3% to 7%.
Okay, so is it possible to, at least from the order book where you have confirmed orders, is it in the same proportion, or is there any further scope for increase in the pharma share in terms of the existing order book and the LOI?
No, currently we can say that this will be in the same proportion. Pharma will increase, but for that we also need to do some capex. So considering this capex, this pharma is expected to increase from 3% to 6 to 7% in the coming years.
So if I may just bring in Anand here, if you look at the CRAMS opportunity in pharma space, that seems to be a lot more, I think, in terms of the potential growth on the market. Although in agrochemicals there is a certain niche. So in terms of, say, 5 to 10 year strategy, would you still remain focused on agrochemicals as you are today, or would you see pharma gaining incremental space in your overall portfolio to say maybe double digits, if not 20-25%? What are your thoughts on that?
Before Anand, I would add one thing, and after that, Anand, you can add. I have mentioned that we are currently in the Q3 FY22, our pharma is 3%, and the pharma is expected to increase to 7%. This is with the 34% increase in estimate of 34% increase in the total estimated revenue for the next year. So we are moving from 3% to 7% with this 34% growth. Anand, you can add. Sorry.
On the long-term vision on the company to foray further into the pharmacy, I think that's a logical thing. But see, basically, we are aware of the China plus factor, but at the same time, we understand that Chinese manufacturers will not let the market go very easily. The moat has to be proper. We are identifying a lot of products in which we would like to be, structured from the basic raw material. So that is why Stanfac will play a very interesting role. We see HFA derivatives in pharma to be a big plus, which are not being manufactured in India and which we plan to manufacture. Of course, there will be a timing, as you rightly mentioned, but this is only on the cards. And in the next 2 years, you will see that the pharma portfolio, the intermediates and the N-1 or N-2 will become very large compared to the current situation of the pharma products. And we are very much focused on it. But again, without a base, we would not like to go into it because, as you would have seen in the past, the Chinese manufacturers bring the price up and down based on certain issues, which we would not like to be competitive again. And so only if we are backward integrated to the basic molecule, that is how we will take it forward. That is the same psychology as a philosophy which we have in our agrochemicals business and on the polymer business as well as in the life science business. That we prefer to start from basics, right from the starting products like phenol, benzene, and then drive up the value chain. So that if we are able to do that, then that is the which will continue on the pharma side. And you'll be surprised, and as Abdullah rightly mentioned again, that the The growth is already there. You will see in the next coming quarters, the pharma percentage improves significantly. The regulations and the permissions have already been sought for, and they've been approved and issued to us. In the next 2-3 quarters, you will really see very interesting percentages coming out. I hope that answers the question.
Yeah, that was very helpful. Thank you very much, and have a good day. Thanks.
Thank you. Our next question is from the line of Abhijit Akela from IIFL. Please go ahead.
Yeah, good afternoon, Anand bhai, Afzal bhai. Congratulations and thank you so much for taking my questions. Just on the TANFAC acquisition, I just wanted to check, in the event of, the open offer kind of yielding less than the full 26% that we are, bidding for. In that situation, what would the accounting treatment of TANFAC be? Would it be, shown as an income from associate in our books, or would there be proportionate consolidation? And also in terms of EPS accretion, if Afzal bhai, you could put some numbers around what we could work with.
Yeah, your first question is that even if you are not going to achieve this, going to take shareholding from the open offer, then also we are having a management and control, because we will be the joint promoters and management control with Tamil Nadu government. So for the consolidation point of view, this should not be any issue on that side, and this will be consolidated proportionate to our shareholding only. And the second question was about the EPS accretive. Yes, definitely. Currently, we can say that our return on investment will be more than 10% initially in the first year itself. And going forward, we are, as I mentioned earlier, that we are planning for the higher capacity utilization of the existing capacities, as well as we are planning to do some minor capex and increase the capacity of the KF and the HF. So it is approximately in the near future, it can turn into the 13 to 14% ROE. And against this initially we have done out of this debt, and which the effective cost is about 6 to 6.5%. So we can say that it is from the initial first year itself, it is the EPS accretive.
Understood. And the entire payment that we have to make will be funded via debt only, or will there be some, internal accruals portion also?
Yeah, initially, I think out of this 300 crore, initially it will be funded through debt.
Okay, as well as the open offer, right?
Yes.
Okay, got it. Also, just wanted to check regarding the derivatives opportunity that you have talked about, the significant quantity of these derivatives that are imported into India today. Is there any number that you could put around, what the size, quantum of those imports is, and how much of that we could capture?
Yeah. Anand bhai, would you like to take this, or?
Yeah, Abdul bhai, I'll take it. So, Abdul bhai, basically, quite a large number of products are being imported into India. And of course, there are some manufacturers in India also for these products. But the products that we have planned, there is nobody in India who is manufacturing those products. I think we will be giving a very detailed answer or maybe a reply by March end, once the management control is in our hands. So we would request you to please give us time till then. But we have the whole strategy lined up. This strategy has been in work since last 4 or 5 years now. The products are ready. Validation have been done in some products. We were waiting for a right supply of HFA, which we have now, and very soon we'll be able to launch those products. In our Surat Sachin sites, we have already got the permission from the regulatory bodies to make the end products using such chemistry, and we will be able to manufacture few tonnages out of these products in the initial phase. But I would prefer that we would give more guidance and idea on the products in detail by March and sometime.
Sure, I appreciate that, Anand bhai. Thank you. And one last thing, just on the working capital negotiations that we have just concluded with our customers. So the 50% of customers who kind of did not yet agree to the change in the contract terms. So what exactly was the pushback we got from them, and have they sort of committed to shifting to the lower working capital terms next year? If you could please some color around that. Thank you.
Yes, for more than 50% of the key customers, we have already got the confirmation from their side to decide the price on the semi-annual pricing basis. But for the remaining 50%, the key customer has not denied, but they have also asked us to implement from the next year onwards, because in any way this year this price volatility will be higher side, so they want us to protect them. So that is the reason that particularly for this year we should continue with this existing pricing mechanism, because this raw material price are based on the benzene and phenol-based derivatives. So that's the only reason why this year they are not ready to implement, but the next year they have also given a commitment from their side.
Great. Thank you so much, and wish you all the best.
Thank you.
Thank you. Our next question is from the line of Ridhima Goyal from Acquaint B Ventures. Please go ahead.
Hello, am I audible now?
Yes, ma'am.
Okay, thank you so much for the opportunity, and congratulations to the team for the good set of numbers. My first question would be, what are the revenue contribution from the recently commercialized molecules which we had in the FY21 and FY22, and what will be the revenue, when this revenue contribution will come from the new molecules which we are going to commercialize in the current quarter, that is in quarter 4?
Yeah, we can say that in the recently commercialized products, means we can take the base as a financial year FY21 and this 9 months of FY22. This 21 months we can consider the recently commercialized products. On the basis of that, the revenue of about 200 to 250 crore rupees comes from these recently commercialized products. And every year this proportion is increasing, because you can understand that for any product, in the first year of the commercialization of the product, we can get a tonnage of 100 metric ton. From the second year onwards, this can increase to 300 metric ton, and for the third year onwards, it can increase to 500 to 600 metric ton per annum. So in the first year, in the recent commercialization of the product, you can consider 250 crores from the recently commercialized products. And your second question is where we are commercializing the revenue in the current quarters, and what will be the outlook for the same. So I would say that in the current year, in the Q4 22, we will achieve a revenue of about 30 to 40 crore rupees from the new products, and in the next year this proportion will increase.
But what about the 4 new molecules which we are going to commercialize in Q4? Then when these 4 molecules will contribute to the revenue overall?
Yeah. This 4 molecules will contribute about revenue of 35 to 40 crore rupees, because in the first year of the in quarter 4 itself. Yes.
Okay, and it will going to increase in further quarters.
Yes.
Correct. Thank you. And the next question which I wanted to ask was, when are we completing this Tensec acquisition, and when this synergy benefit will going to arise to the Anupam going forward?
Yeah, regarding the timeline for the completion of the transaction, as per the agreement with Birla, we have to complete the transaction within 21 days from the agreement. So we have to complete the transaction of Birla Group by first week of March 22 for acquisition of a controlling stake. And simultaneously, we are also processing the open offer, and this open offer process will complete by first week of April. And after that, we will get, once we get the full control, but we can take we will be able to take a control in first week of March.
First week of March, okay. So I can expect that by quarter 1 of FY23, the synergy benefits can accrue to the Anupam Rasayan.
Yes, we can say. Yeah, that's correct.
Can you quantify the synergy benefit?
No, currently we are in the process of quantifying this, but yeah, definitely the raw material which we are going to captive consume, this to that extent, this capacity utilization will increase immediately.
Mm-hmm. Okay, and that will contribute around 200 to 300 crores. That's what you mentioned earlier, right?
No. This you are talking about the Anupam or the synergy benefit.
the synergy benefit I'm talking about.
No, synergy benefit not to that extent immediately. This will take time actually.
Okay. Thank you so much. That's it from my side.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may enter star and 1. Our next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question. So for this quarter, for 9 months, can you quantify how much is the volume growth?
Yeah, total out of this 43% growth, 42 out of this 43%, 42% is the volume growth, and 1% only this growth due to increase in price only.
Okay, understood. Great. And so this order book of 2,600 odd crores that you have, is everything going to start from FY23?
No, actually, for this order book position, there are a different timeline for this different orders. Just for example, so if you talk about the first LOI of 1,100 crores, these are going to commercialize from third quarter of FY23 and can revenue of rupees 225 crore rupees per annum. Second LOI was for the 540 crores. This was also out of this 540 crore rupees, 140 crore rupees, the contract is already started and we started delivering the revenue from the current year onwards. The third was about 135 crores, which was for our existing product only. Only we have entered into the contract, otherwise this volume was there. And the fourth contract is last we recently announced is for the $100 million, for which the revenue will start from Q3 23 and the full annual volume will start from FY24-25 onwards. So this all the agreement have different terms and conditions, and this also based on some capex also.
And what is the kind of capex that we're looking to do?
Yeah, for all this LOI and contract, in the earlier call we guided that we need a capex of rupees 200 crore rupees for three projects. And recently in the month of January, we have executed a LOI of $100 million, which is for the 700 crores, and the annual value will be 140 crores. For this contract also we need to incur a capex of 60 to 70 crore rupees. So with this capex, total capex requirement will be 206 crore rupees for 4 different projects.
And most of this will be incurred in FY23. This 200 plus 60.
Yes, at least 80% capex will incur in FY23. You are correct.
And it will be funded through internal accruals, or will we need debt for this also?
This will be a judicious mix of debt and internal accruals.
So we're taking about 300 crores debt for the Tanfec acquisition. We will also need some debt for the capex. Where do we expect the debt? And obviously, the capex that you announced for FY24, some of that will obviously be in 23. Where do we expect the peak debt to be in FY23 then?
Particularly on the debt side, the maximum debt, including this acquisition debt, we can say that the term debt will be 375 crore rupees and the working capital in the range of 150 to 160 crore rupees.
Okay. And just one last question. In an earlier call, you had mentioned that sustainable gross margins are more in the range of 57 to 59%, with EBITDA margins in the range of 24 to 27%. To an earlier participant, you mentioned that gross margins are more in the range of 60 to 65%. Have I heard it correctly?
No, 60 to 62%. Rest is okay. Yeah, 60 to 62.
So EBITDA margin should also at least be 26, 27%.
Yeah, if you see in the last quarter, it was in Q3 it was more than 28%. But on the conservative side, we can consider in the range of 25 to 27%.
Okay. And what is going to drive this gross margin or EBITDA margin higher versus what we were earlier working with?
Particularly we are considering our normal gross margin as a 60%, and the EBITDA margin is 25 to 27%. We are anticipating increase in EBITDA margin due to this cost reduction measures undertaken by us. First, we have already implemented a solar power plant of 10 megawatt, which is started giving us savings of rupees 10 crore per annum. Also, the interest cost, which is also the part of the net profit, but not in the EBITDA, but we already started started saving the finance cost, which was earlier in the last year it was 68 crores. In the current year, we are estimating 25 to 27 crores only. Also, we are looking for significant savings in the environment cost in the current year. We are also planning for some to set up a byproduct plant to convert our waste into the byproducts. So, with this type of strategy, we are estimating this EBITDA 1 or 2% on higher side.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Madhav Marda from FIL. Please go ahead. Mr. Madhav Marda, could you please unmute your line and go ahead with your question? We'll check the connection from Mr. Marda and rejoin him to the queue. Ladies and gentlemen, if you wish to ask a question at this time, you may press star and 1 on your touchtone telephone. Anyone who has a question may enter star and 1. You have a follow-up question, S. Ramesh from Nirmal Bang. Please go ahead.
Yeah, just to follow up on the discussion with the earlier participant. So to put the numbers in perspective in terms of the capex and the overall growth in revenue. So talking about 260 crores capex for the new projects. If you work out the full year impact, you have 545 crores of revenue from the 4 contracts which we plan to execute over the next 3 years. Full year contribution starting from FY23. Is that correct?
Actually, please, can you repeat? Actually, your voice is breaking.
Mr. Ramesh, can you please switch to handset mode and speak, please?
Hello. Yeah, when we were discussing the project-wise breakup of the impact on revenue and the capex required, the total capex required is 260 crores. If I add up the numbers I heard for each contract on an annual basis, it works out to 225, 140, 40 and 140. That's 545 crores of full year impact in terms of revenue. So is that number correct? And the overall capex required is 260 crores, right?
Yes, this is right. You can you can divide this 2,600 into 5 simply. To arrive at the simple calculation, you can divide 2,600 divided by 5. So you are correct. 525 crore rupees will be the per annum revenue out of this capex of 260 crores.
And this full year revenue will come from FY24.
Yes.
Yeah. So this the balance LOIs of 1,800 crores. When are they likely to be converted to contracts?
This will be gradually converted into the contract from the next quarter itself because the R&D and pilot facilities work is going on. And as I mentioned that on the next quarter onwards, gradually it will be converted into the contract once the trial quantity is approved by the customers.
Okay, thank you very much.
Thank you. We'll take a next question from the line of Madhav Marda from FIL. Please go ahead.
Yeah, am I audible now?
You are, sir.
Okay. Sir, actually, if you could just repeat for me if possible, like FY22 and FY23, the total capex that we expect to do, including TANFAC and Anupam Rasayan, the existing business. I'm actually not very clear like how the capex looks like for this year and the next year.
Yeah, sure. So first, until 31st December, so 9 months FY22, we have incurred a total capex of 104 crores. This 104 crore includes 44 crore rupees for the installation of the solar power plant, 30 crore rupees for the setup of the hydrogenation facilities at our unit number 5, and 25 crore rupees for one-time capital expenditure for setting R&D and pilot facilities. Now, 21 crore rupees is the pending, and this is expected to be implemented in the current quarter. So for the FY22, the total capex will be in the range of 125 to 130 crores. Now, for the future capex, I was mentioning that earlier in the last call, we have guided that our total capex will be 200 crore rupees for 3 different projects. And recently, we executed one LOI of $100 million, which will give a revenue of 140 crore rupees per annum from FY23-24 onwards. For this capex also, we need to incur. So this LOI also we need to incur a capex of 60 crore rupees. So earlier it was 200 crore rupees plus this 60 crore rupees. So total capex requirement will be 260 crores, and this will start from the from next month or maybe the first from the April 22 onwards. So we can say that out of this 260 crore rupees capex, 80% capex will be executed in FY22-23.
So basically FY23, we are expecting something like 220 crores of capex, which is 80% of 260 crores, right? Approx.
Yes, that's correct. Yeah.
So this is in Anupam Rasayan, and then TANFAC also you said that there will be some capacity addition, right? So could you help us understand how much capex goes there?
Yeah, this will be TANFAC capex will be 200 crore rupees, but this we have not finalized yet because we need to discuss with the other stakeholders also. But yes, I would say that the 10 to 15 crore rupees capex we will do immediately because we need to increase the capacity of the HF and KF, and for that we need a nominal capex of 15 to 20 crore rupees only, and for that the cash balance of 40 crore rupees is available with the TANFAC. So that we will do, but for this large capex of 150 to 200 crore rupees, we have not yet decided, but we need to discuss with the stakeholder with the respective company also.
Okay. So FY23 total capex, at least right now, will be closer to 250 crores, right? 220, 230 in Anupam Rasayan, and then TANFAC will be another 15 crores, at least right now. And then we'll see how.
Yeah. Yes, correct.
And then for FY24, for maintaining that revenue growth rate, the FY23 capex will be sufficient for maintaining a high growth rate into FY24, right?
Yes. This is sufficient. Yeah, to take care of the growth till FY24-25. Yeah.
Okay, got it. And so one more question. It was asked a bit earlier also by another participant, but for example, if we acquired a total of say 35 or 40% stake in TANFAC, just as an example, in that case, like will we book the entire revenue EBITDA and then have a minority interest for TANFAC, or will we recognize only 40% of the income, or how will the accounting work in that?
This will be consolidated to the extent of our shareholding only.
Okay, so there'll be no minority interest, that kind of accounting?
Yeah, no.
All right, sir. Thank you.
Okay, thank you.
Thank you. Our next question is from the line of Chintan Modi from Haitong Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So with respect to the TANFAC acquisition, just wanted to understand that after we invested 300 crore rupees and TANFAC starts scaling up, so how is basically this commercially this arrangement going to be with TANFAC and between us? If you could explain that.
Because for this to acquire the controlling stake, this 25% stake of the Birla Group is important because the Birla Group was in control since 1980s, and we are replacing the Birla Group. So the same as Birla Group, we will have authority to run the total entire business. So it is the same as we will continue with the TANFAC, and though the Tamil Nadu government is the partners and the joint promoters with a 25% stake, but they are not involved in the day-to-day operation of the company.
So my question was that, TANFAC will become a manufacturer for Anupam Rasayan. Is that the right understanding? Or it will have its own, the products?
Yeah, partly it will be. Yeah, partly it is correct but we don't want to disturb their existing arrangement with their customers, particularly for this HF, KF and the other products that we want to continue with their existing setup. But our target is to utilize the balance surplus capacity available in TANFAC, and to that extent they will provide a raw material to Anupam. And in addition to that, as I mentioned, that we are planning to increase the capacity of the key products, HF and KF, and if this happens in next 6 to 8 months, after that this TANFAC will start providing the raw material to Anupam Rasayan. And in addition to that, as I mentioned earlier, that we are also planning for some higher capex, and when we will do this, then this TANFAC will also start manufacturing niche fluoro derivatives. So this is two ways. The TANFAC will also start manufacturing the fluoro derivatives, as well as in the future Anupam is also planning for the same.
Okay. So considering all these products that Anupam has developed and what TANFAC would be manufacturing it. So for this, the profitability levels and everything, should we expect that current level of profitability will still be maintained in TANFAC? considering that it would be arm's length transaction.
Yes. This will be an arm's length basis only, and the EBITDA of 25% and the profit after tax of 17%, your Tensec would be able to maintain. No doubt on that.
Okay, got it. And just a little bit wanted to know about the history of the company. That how did Tamil Nadu government became a shareholder in the company, or it was originally a government company and Birla participated or something? I mean, to understand.
No, actually, this was started in 1972 by Hindalco and Tamil Nadu government, and after that this Birla Group acquired from this Hindalco Group in 1986, 1987, and become a joint promoter along with the TIDCO. And from 1987 itself, the Birla is running the day-to-day operation of the company. And the TIDCO, though they are the promoters, but they are not involved in the day-to-day operation of the company. And this arrangement continues till FY22.
Okay, but was it, I mean, government stake was against some land parcel being provided to Birla or something? I mean, against what? Just trying to understand that.
No, this was started with the equal capital contribution by Hindalco and Tamil Nadu government. And after that, they acquired a land.
Okay, got it. And any indications like whether they are also willing to sell off their stake, or are we kind of negotiating with them also?
Yeah, for that, I think we won't be able to comment on this same actually. We wish if they sell, then we are ready for that, but we can't discuss more on that on this side. But we will be more than happy if they come for sale. From our side, we are very clear.
Oh. Sure, sir. Got it. That was very helpful. Thank you.
Thank you very much. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to the management team for closing comments. Over to you, sir.
So specialty chemical industry is expected to grow at double digit over the next 5 years. And this is due to the rising demand from end user industries and supply problem arising from stringent environmental norms in China. And we believe we are well positioned to capitalize on these opportunities, owing to successful track record of custom synthesis and manufacturing, low dependence on raw material import from China, our automated manufacturing infrastructure, and established R&D capabilities, along with our focus on improving cost efficiency and productivity. To summarize the discussion, we would like to state that with a robust revenue visibility, a consistent flow of new product inquiries, backward integration of our products, focus on high-value molecules, and revised pricing mechanism under contract to improve the return and working capital cycle, we are confident that we will be able to maintain the growth momentum as we move forward. Finally, we really appreciate the support of our investor community. We promise to do our best to further improve our performance. We hope we have been able to answer all your questions satisfactorily. If you have any further questions or would like to know more about the company, we will be more than happy to help. Also, you can contact our IR agency, Christensen. Stay safe and healthy. Thank you once again for taking the time to join us.
Thank you, members of the management. On behalf of Anupam Rasayan India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.